guys, this is Chris Mincola with the Mincola Group, Real Estate Professionals, West USA Realty, and I'm here with Evan Einhorn of Modern Home
Hey.
Lending. How you doing?
Good.
Thanks for joining us today, Evan.
Of course, thanks for having me.
Yeah, so how's quarantine life?
Can't complain. I've been using the word grateful a lot because honestly, just working hard and staying inside and going to the park, So, what about you?
Yeah, it's been busy. I know you have been busy too, and it's kind of crazy with everything going on. People are still doing their thing, as far as refinancing or buying, selling homes. So, guys, we wanted to kind of do this to give you a quick market update on what's going on, and also some ideas on a couple of loan products that Evan has that may kind of fill some gaps, and a quick idea on what rates are. So. We'll keep it real short today and get right into it. So on my end, and I've been, looking at Cromford Report, our broker, all the stats on ARMList, everything that everybody's putting out, suggesting and talking to a lot of people. And it's just basically, we're still selling about 1,000 homes every 3 days. We're looking at, instead of going 90 miles an hour, we're going about 70, and I would say as far as total sales and listings, we're down to about 20 to 30%. But if some of that's iBuyers and investors that, kind of got out of the market. Some people that didn't have to move aren't moving, and maybe waiting. So I think we're going to see our busy season, usually it's March through May, maybe go to June through August, or get stretched out a little bit longer.
We're already seeing it. I wouldn't be surprised if, because they always quote mortgage applications a week later.
Yeah.
But I've been talking to a lot of brokers that all of a sudden their purchase applications started going up this week. Because again, not everyone wanted to move, but I wouldn't be surprised if in a week or two you hear the numbers from this week or next week of saying, hey, a lot more people are all of a sudden buying and off the fence because states are opening up.
Exactly. And even the national numbers that NAR just put out isn't crazy. New York City's got some issues, or LA, once again, because the media speaks like that's where everything comes from, or how everything that's happening there is happening. But in our market and really across the country, numbers as far as appreciation is not bad at all. We're still holding at about a 98.5% or so. List for sales price ratio, which means $100,000 home listed, it's going to sell for 98.5. So that's kind of normal. New home sales are still happening, and they're still adding $500 a week like they always have on their price increases. So in general, guys, there's really not much happening there. Just a little bit. I think even more than people worrying about another 2008, because again, the big difference is we're not in a 2008 situation with inventory being so low. I mean, we're looking at a 2-month supply, give or take a little bit, every from the last couple of months. So, I mean, we've got super high demand here in Phoenix. So I'm really, really not worried about it. I'm sorry.
Just to put that in perspective, what's a normal market as far as month supply inventory?
Yeah. So usually we'd rather see 3 to 4 month supply. 4 to 6 month supply would be more where it's really a neutral playing field. 3 month supply would be nice because then that's pretty brisk and keeps things moving along. 3 to 4 would be nice. So in other words, if we had inventory of say 30 to 40,000, properties on market, that would be kind of more of a normal market. But our market's not really normal, right, Evan? Because we're a property gets listed and it's sold and closed within 54 average days on market.
Everyone's moving here.
Yeah. So, it gets listed and it gets sold. It's kind of it. So, and real quick, let me just point this out. Everything under 300,000 in our average market now, our average sales price is over 300,000 now. So, everything under 300,000, yes, there's been less of that being listed and sold, but over, actually, there's really not any difference than what we've seen in previous years. Not unless you're in the super luxury market, you know, like $2-3 million. Then you see a change.
Oh yeah.
But that's just within looking at the last week and last month worth of numbers. So we'll see if anything changes, but that's, you know, in a nutshell, that's kind of where we are. You know, I know people are worried about, oh, our price is going to go down. I think people are more worried about, am I going to have a job? That's why they're kind of waiting. And also, do I really want people walking through my house right now if I'm an older person or I've got some sort of ailment? Totally get that, you know. So.
Oh yeah. That's what the mortgage companies are concerned with. The only reason why rates aren't even lower is because, and they're so low, but the only reason they're not lower is because they're worried that, hey, they give you a loan today and within the next 30, 60, 90 days, you lose your job and now you can't pay for your brand new house.
Right.
You know, and you're more likely to foreclose if you just bought the home versus if you've lived there for several years. So,
exactly. Yeah, I mean, I totally get it. You know, not certainly not judging anybody if they want to wait at all. We're just trying to let you know, on our end, we're busy, and here's what the actual numbers are telling us. So,
right.
Evan, how are we doing on rates? And tell us about, you know, if somebody's looking to fill that gap, if they're not kind of getting out there maybe in the retail market, since you're a broker dealing at the wholesale level with a couple dozen lenders at your disposal, what's the difference?
Yeah, so I don't know if everyone's heard, and I don't know if we talked about this a couple weeks ago, but there was a big announcement by Chase Mortgage that they said, hey, everyone needs a 700 credit score and 20% to put down. Now, when a big bank like Chase, who they were top 5 last year as far as mortgages in Arizona, when a big bank like that does that, you know, a lot of people think, oh my gosh, now I need 20% down. Oh my gosh, now I need 700 credit score. So, but that's not the case. That is a few banks taking a very conservative approach. There's a lot of lenders that really just don't want to lend right now because they are worried about unemployment. They are worried that, hey, you are going to lose your job and you are going to have to go into forbearance and skip payments, you know, and that costs the lenders a lot of money. So now more than ever, definitely important to talk to a true mortgage broker. You know, I know someone that works at a mortgage bank, and they would call themselves a mortgage broker, I think, if you're talking to them. But for example, they just lost all their cash out refinances. So right now, they can't help anyone pull cash out of their homes. They work at that specific bank. We do have a lender that said, hey, no more cash out refinances as well. But the fact is we have 17 other lenders that can't.
Yeah.
So, you know, we've been helping a lot of people that have had credit scores under 640 that have been denied elsewhere, or we've had a couple cash out refinances that Wells Fargo, Chase, and honestly some smaller mortgage banks, they just won't touch anymore. So yeah, lots of like, I can still do, other than some jumbo loans, I can still do almost everything I could do 60 days ago.
That's
awesome.
I mean,
in one way or another. You know?
So right now during this period, while there's this worry going on from everybody but the lender side, and when we say lenders, we mean the wholesale lenders that actually fund the loans and stuff like that. So
right.
You're the broker.
Right.
So what is the biggest difference with qualification right now that you're seeing as far as a home loan pre-approval?
I'm seeing basically those scores. Hey, credit score under 640, you might get the loan. There might be a little more fees. Now, on a purchase, that just means, hey, if you don't have those fees out of pocket, you ask the seller for an extra couple thousand.
Right.
You know what I mean? You know, if you're self-employed or you're using rental income, we might not be able to go to all the different lenders. But I do have one lender that has not added any like conventional loan overlays. So they haven't added any extra rules. They're exactly the same compared to 60 days ago. And on the flip side, I have another lender that hasn't changed anything for FHA. So, you know, there are some lenders that haven't changed this. Now, if they're the only lender doing it, they might be a little more expensive, but that's where I'll review that with you and see, hey, you know, is it worth it? Does it make sense?
Right.
You know, is now a good time to buy? Or, hey, maybe your credit score is going to shoot up from a 580 to 640 within 30 days. So it definitely makes sense to look. But if that 580 to 640 or 660 or whatever is going to take 13 months, who knows what things will be like in 13 months as far as rate go, you know?
Yeah. So cash out refis would be something to kind of touch on real quick a little bit more, Evan, because a lot of people can't get them from other lenders right now at the retail level, you know, and so or they have ridiculous, you know, things happening there. But right now I see that as being important because it's like if somebody's thinking about, well, should I do forbearance or refi, maybe cash out, get some emergency money right now and skip a couple of payments type of a deal.
Right. So lots of people definitely thinking about that. Like we have a scenario, the home's worth 300,000, they owe just over 200,000, and they have about just under 30 grand in credit card debt.
Yeah.
They are going to pay off all their credit card debt, pull out cash, and have one new loan and no credit card debt, and basically start over fresh with their new mortgage. You know, and they're skipping 2 payments in the process. So that's a perfect example of a cash out refi that does make sense.
Yeah.
You know, and it also depends on your current rate and all that kind of stuff, but you know, they're still out there for sure.
So speaking of which, like today, what's the current rate? I know it changes from morning to afternoon and everything.
Yeah. So I can't legally quote rates on here, but I will quote you the average rate nationally, because that's not our rates, which I can tell you typically we're low. Yeah, so the average rate with 0.7 in points and fees, according to Freddie Mac, was 3.23%, which is nuts. Yeah.
That's
so
great.
it's within about an eighth or quarter compared to the U.S. history ever. So, you know, that's with paying some fees. So, you know.
So explain that when we say fees. Do they have to hand you a check or do a transfer, or is it kind of rolled into the loan?
Yeah, on a refinance, it's rolled into the loan, so it's not out of pocket. So, you know, the average person out there is probably getting a 3.23 and paying 0.7 points. So on a $200,000 loan, they're increasing their loan by $1,400 to get that rate. According to Freddie Mac, national averages as of April 30th. Again, we have clients locked all over the place. We have clients lower than that, higher than that. Totally depends on the scenario, but yeah.
Okay. Well, awesome. Anything else that you think would be important to let people know about any loan products or things going on?
Yeah, I think so. FHA, VA, they lightened up some of their forbearance things. So basically, forbearance is when you're skipping payments. If you need to skip payments, definitely reach out to your servicer, but they are making it a little easier that you don't have to pay. Let's say you skip 3 payments, you won't have 4 payments at one time. Definitely reach out to your servicer to get all the information. But if you do have an FHA VA loan and you are struggling, that is something to look into. So,
okay.
Yeah.
Awesome.
Cool.
Great. Well, guys, thanks for joining us. We just wanted to get you some tidbits of what's going on today, and you know, we like to get these out there every 2 or 3 weeks or so, and keep you up to date on what's going on. If you guys have any questions, Evan, how do they get a hold of you?
Yeah, you can give me a call, 602-456-2273, or you can go to Modern Home Lending and then find me. Again, my name is Evan. So appreciate you having me.
No problem. Guys, you know how to get a hold of us, mincolagroup.com or 480-788-8569. Thanks, Evan, for joining us. We'll see you guys next time.
See you later. Bye.
Bye-bye.